Markets are trying to hang on as inflation seems to be trying to peak. So let's jump in and take a look at what's going on. A couple of things in the news. The markets, Dow Jones finished almost flat, up 56 points. S&P up 0.87%, 34 points. NASDAQ up 1.45%, balancing out yesterday. We'll see how things end for the week. And bonds were down a little bit today. Dollar was back down again. We'll take a look at the charts in a minute. But a couple of things on the agenda today was wholesale prices came in a little bit less. Well, they rose a little bit less than expected. So we still have high inflation, rising prices, but they rose less than expected. So that's giving markets some momentum. And the Fed pause, pivot. Inflation's peaked. Transitory is all back on the table in conversation, and that's what the markets are rallying on. Crypto.com customers worry it could follow FTX. A CEO tries to reassure everybody everything is fine. Of course, we've heard that before. So again, just like I said the other day, you need to protect yourself, protect your assets, get them off the exchanges. If you're going to trade what you expect to lose, not what you're willing to lose, but just you might as well figure you're going to lose it because that is very possible. And then, of course, the big news of the day is that Russian missiles apparently crossed into Poland during the strike on Ukraine. So they are investigating that. A lot of people calling for Article 4 of NATO with the NATO, covenant. An attack on NATO is an attack on all. So markets kind of dipped a little bit on that. So these are some of the headline risks out there. If this is real, it turns out to be a fact and NATO has to respond, then we have major escalation on our hands. And that's going to be, you're going to see big drawdowns in financial markets if that happens. So we'll have to see. It doesn't really make much sense for them to do it. I think potentially it could just be sloppy execution on their part or just, fallout or whatever, but hopefully it's not intentional. Hopefully it doesn't escalate, but if they attack, then I think at this point we just need to annihilate their forces in the Black Sea, their troops in country, and just retaliate in a way that they will not even think about doing this ever again. But that's one man's opinion in terms of that situation. This whole thing's a mess and it needs to end. But anyways, enough of that. So let's go ahead and jump into the charts here. And this is the Dow kind of hanging on to this little level here. I've got the hash ribbon indicator. We're going to talk about that in a minute. I've got the Dow's kind of hanging on here. NASDAQ hanging on, trying to hold on to these gains. S&P hanging on. And of course, the VIX backing up a little bit, but still in the lower territory. Dixie still dropping a little bit today. And the 10-year was down a little bit, 3.75. So none of this is going to be good for the Fed, their viewpoint, their position of what they're trying to do. The Fed wants tightening financial conditions. They do not want loosening of financial conditions. They want risk off, not risk on. So the markets are testing the Fed's resolve. And we have some runway here. So if we get a good inflation report in December and it looks like inflation is peaking, then that's going to give the markets some horsepower to continue upward and onward and to potentially have some more momentum. Not necessarily, I don't think, a catalyst for all-time highs or anything like that, but definitely carving in a nice little base and just hanging on for a while to see what happens into the end of the year. Markets could continue to bounce around and rally into the end of the year as the investment bankers, fund managers need to earn their bonuses and retain their jobs going into next year because they are all down big time. And the ones that aren't are the ones that have been kind of fudging a little bit. So let's take a look at Bitcoin here, kind of hanging on to this. And again, if you look at all of the price action across the board, Ethereum, this is on the daily. All these charts are on the daily here. Ethereum hanging on. Bitcoin, oh, this dominance, I'm sorry. Here we go. Bitcoin, there's Bitcoin on the daily there, kind of hanging on. Ethereum kind of hanging on, same price action. XRP, Cardano, Solana, Matic. Again, everybody's got pretty much the same price action going on. But here's something I want to take a look at. So this we're going to go back for the history of Bitcoin. We're going to take a look at the hash ribbon buy signal, hash ribbon indicator. And we're going to take a look at something here, because typically when this buy signal flashes, it flashed on the daily, has not flashed on the weekly yet like it has in the past, but it certainly flashed on the daily way back here in August. So typically in the history of Bitcoin, this has been, the markets have done nothing but gone up after that and never breached the previous low after that buy signal flashes. So there's a couple of little things in the history of this. So the history of this is every time this buy signal flashes, the markets typically rally and go up, because this signifies strengthening of the hash rate, miners coming back online, holding, not selling. This is your miner capitulation signal. As we know, the difficulty adjustments at all-time highs. The hash rate's been wide open because a lot of miners have entered the space. Hash rate has just gone through the roof. Difficulty adjustments at all-time highs, and miners now have been closing, capitulating. They're unprofitable. And even as the hash rate declines, the difficulty adjustment adjusts down. It still isn't making miners profitable at this price point. Miners were breaking even around 26, 30,000. When you factor in labor, rent, overhead, electricity, borrowing costs, all the different things, equipment costs, that break even was in that 26 to 30,000 range for Bitcoin. I mean, they're losing money big time right now. That's why miners are going out of business, filing bankruptcy. Most of them have sold. The big ones, anyways, they're in deep trouble right now in this territory, and this is why you see the hash rate declining, because they're shutting machines down because they can't afford to operate. So it's going to take a little while for this to adjust. So it almost looks like the hash rate is rolling over, and it potentially could fall back into capitulation mode again, and we would lose this range of the buy that the signal flashed. But again, a couple of things. Once the buy signals flash, the previous low before the signal flashes is typically the low. Well, in the history of it, it has been the low for the cycle. And typically the price never goes back below that low after setting a new all-time high. All of that's been violated this year because Bitcoin has only existed in its entire life cycle. It has only existed in a macro bull market. I mean, there's the history. Let's go ahead and put it on log scale so we can see it a little bit better. This is the entire history of Bitcoin here. This is the Brave New Coin Index going all the way back to when it was born in 2010. This has been quantitative easing, artificially low interest rate, Fed, QE cycle this entire time. No inflation, no recession risk, the Fed pumping liquidity into the markets, interest rates staying low, lots of speculation, the whole 9 yards. And then, of course, the whole network effect over the last 10 years of people entering the space and things like that. That has been the existence of Bitcoin for, the entire macroeconomic cycle of a bull market prior to November 2021. Since then, we've been in a downtrend. We've been in a macroeconomic bear cycle. We're in a Fed tightening cycle. Interest rates obviously have risen. They're punitive. We are in quantitative tightening, rolling off the balance sheet, tighter financial conditions. This last 10 years has been risk on, more particularly last 2 years, this is risk off. So let's take a look at the history of the buy signal. Let's go all the way back and look at these rules I just talked about, because there are some analysts out there saying that the market's just going to go up because every time this buy signal's flashed, the market's done nothing but gone up, which is true. But there's the first time it flashed right there. And when it did, the low before the signal flashed was the low for this cycle, and it did not breach that low again. So let's go ahead and fast forward, and let's look at the several times the signal flashed before 2013, 2014. So here's 2013, 2014. Signal flashed right here. Bitcoin price was around $20. How would you like to have bought Bitcoin at 20 bucks back then? So that's where the signal flashed there. Bull market from there. Price never went back below $20 again, as you can see, after that signal flashed. Never went below 20 bucks, sets a new all-time high, goes down, little bear market, signal flashes in January 2016. The previous low before the signal, the low before the signal flash was the low for the cycle. That was $176. Price never breaches that level. Well, I guess it did right here. Yeah, I guess it kind of breached it right here in 2018 or 2015. I'm sorry. Yeah, it's 2015. This was this is 2015 here. That's 2015. I'm sorry, June 16, 2015. So yeah, I guess it did break below here in that 2015, 2016 cycle. That was a big market issue as well. And then, so that's one area where it did breach it, but again, it did, continue up from there. Yeah, continued up into a bull cycle from there. And let's take a look at what's this time frame here. We have the Bitcoin buy signal. There's the low here at 531. Let's see if it ever breached that level. Again, after the buy signal flashed, goes into a bull run right up here. And I'm going to say, I don't know that the price got back below $531 after that. It looks like the low was around, because that was after 2018, the low was around 3,000. So I don't think it ever breached that, because here's your buy signal here. The low, when this buy signal flashed in 2019, was $3,100. So that was it. Market kind of settled, puts in another bottom, and this is where a lot of analysts are saying we are right now with the buy signal and this price action. They think that we're in this area, the buy signal's flashed, that low's been put in. The problem is this time that low has been taken out, whereas before that only happened one time way back in the beginning, 2015, 2016, when that happened. And market did rally in a bull market, quantitative easing, zero interest rate environment. We're not in that environment right now. This time is different. I made a video on that the other day. If you haven't seen it, go check it out. This time is very different. Had another little drop. Bitcoin buy signal flashes. The low before it flashes was $6,600, higher than the previous low. Market goes on. This is your March 2020 pandemic capitulation low. Had a wick down to 3,800, did not break the previous low, but it did break this low after the buy signal went off. So we get a new buy signal. That's the low when the new buy signal flashes. Market goes on to a mega bull run. We got another buy signal right here. The low is put in at 8,000, goes off after a little drop. And then of course, back into this November 2020 timeframe, market dipped a little bit, get another buy signal, and the low put in right here. Market goes on to a bull run, did not take out that previous low here, did not take out the previous low here, did not take out the previous low right here. And here is the most recent in August of 2021. This is the low prior to the signal flashing. You had a couple of them. You had one here and one here. Price did not take that low out. Came close, but did not take that low out before it went on its final run before this November 21 top. And now here we are. Buy signal flashed. Here's the low of 18,720 on a close, 15, what was the wick low? 17,500 wick low. We've taken that out and we've closed below it. So this signal has now been invalidated because we've broken below that low. Of course, that has happened a couple of times way back in the past. But again, very different cycle. This looks like it's rolling over. It looks like it wants to go back into capitulation. With everything that's happening right now with all the exchanges, FTX, things like that, that is your most likely probability that you're looking at more downside, more capitulation, more ranging. It could sit here and range from, 15,000 and pop back up into this 18,500 and range down 14,000, 15,000 in that level for a while. But if it breaks and loses that level, like we looked at the other day, there's not much left to support Bitcoin. So, that's kind of what I'm thinking right now, is that we're more akin to what's going on right here versus right here, simply because we don't have the catalyst of a Fed pivot or anything to really drive the market, because the Fed has not commented. This is just speculators commenting, investment managers commenting, academics commenting, economists, fund managers saying inflation's peaked, Fed can slow down. But the Fed is coming out, Fed members are coming out saying, we're not done. We're going to keep it going. We're not going to lower rates. They're going to stay higher longer than you think. They might slow the pace of hikes. In other words, 50 basis points instead of 75 if we get another soft inflation print, but they're not stopping. They're going to hit their target rate because you have to get inflation down. The Fed funds rate has to be higher than inflation to keep inflation down. So we got a long way to go. Inflation has to back up quick. The question is, is it realistic to expect inflation to just retreat from 7% down to 4% in the next, before the end of the year, another month, 6 weeks, whatever it is, or into the first quarter of next year? I don't know. A lot of things are possible, but what's probable, what's likely, is what is yet to be seen. So these are the things I'm looking at, and I am in risk off mode. I am in cautious mode. When you see the markets rally, be careful, because markets are designed to extract the most amount of money from the most amount of people, get you really bullish, get you feeling the FOMO, so you jump in there and then strip it right out from underneath of you and then do it all over again. So in a bear market, that's kind of what happens. Bull markets can do it too, but generally in a bull market, price keeps going up, so you can just hang on and ride it out. But in a bear market, it's designed to torture you mentally and extract as much money out of you as it can. So that's kind of what's going on. A lot of it's programmed, it's algorithmic, and it's pretty darn good in terms of how to handle human psychology. So when you catch yourself feeling the FOMO and things like that, don't worry about it. If markets do start, going on a bull run, you can always get in and take advantage of it. So that doesn't matter. But if you're wrong and the markets strip and fall out from underneath of you, they can go a lot lower than you think and stay there a lot longer to kind of shake you out and take everything you have and keep you buying in on the way down and just kind of fleecing you. And that's what they're designed to do. The whole, buy the dip, dollar cost average, those types of things are programmed into the algorithms to strip you and take everything you have. So be careful. Make sure that you are understanding where we are in the global macroeconomic cycle. And again, when the Fed says it's bull market on, that's when it's bull market on. This is what I'm looking at. I'll see you in the next video.